The trustee for this trust is provided with a pooling and services agreement, his management book, his rules that he has to follow to comply with SEC rules. In this agreement, there's a clause that says if you fail to pay your mortgage, the trust enters into an insurance contract. If the mortgage isn't paid, the insurance company pays it, but the money doesn't go to you, it goes to the trust. This is called a credit default swap. Now, when you run into trouble like losing your job or facing financial difficulties, and you try to contact the bank, you get the runaround. Submit these papers, resubmit them, and all those practicalities. You might have been told, "We can't help you until you're 90 days late." Sound familiar? Well, on day 91, the insurance policy triggers a payoff to the trust from the insurer. The trust receives the full amount of the note, regardless of how much you've paid on your mortgage. The trust gets the full amount, let's say $100,000. But here's where it gets mysterious. The Federal Reserve allows the trust to leverage that $100,000 note 30 times. They create 30 different levels, and your $100,000 note is purchased by other lenders. Now back to the default. The insurer paid off the note when it was 91 days late. At this point, who has lost any money? Nobody, except the insurer. Now, someone attempts to foreclose, maybe the lender you got the note from or the trust itself. They kind of steal the house because nobody has any skin in the game. They've all been paid commissions, and they've been very successful in stealing houses. What happens in courtrooms? Average folks lose their homes in minutes because they didn't know what to do, where to go for answers, or they simply didn't have the money. In this foreclosure arena, the only players are consumers who can't afford to pay an attorney. What do these attorneys do? They delay the time, maybe saving you a couple of months of rent or mortgage payments. But at the end of the day, when you pull the shade down, they win a dismissal without prejudice. Meaning the bank that is foreclosing, who doesn't have any skin in the game, will come back again in a month and try to foreclose again. So what is quiet title? When you're in trouble and trying to find someone to talk to, someone to give you straight answers, they stonewall you. They put up firewalls, making it difficult to reach the right person. A quiet title action, which has nothing to do with your debt or your deed. Like, share, and subscribe for part 3 of this discussion. Thanks for watching.